Hey guys, Brad here at Elliott Wave Made Simple, and today we are going to be looking at silver futures. I just got to give a shout out to my man Armando in Miami. Armando is a master of trading psychology. He has helped me immensely in the last 7 or 8 months. It's really added another level of consistency to my trades. I highly recommend that if you are struggling with the psychology aspect of trading, and what I mean by that is if you are giving back too many of your gains on a consistent basis, if you find yourself frustrated and making similar kinds of mistakes over and over again, there's no substitute for being in a group of other people that are aware of the psychology, especially with a mentor like Armando. I cannot tell you how much he's helped me. I can't overstate that. So just a shout out to my man Armando. If you want to check him out, it's theprofessortrades.com. Just type into Google The Professor Trades. Great guy, great lessons in psychology, consistently profitable trader, very transparent. Mainly, he is a teacher at heart, which is probably why I gravitated to him because I'm also a teacher. I was raised by two teachers. Anyway, let's go ahead and dive into the silver analysis. Today is Sunday, June 2nd. Here we go. All right, so we already know we had 5 up in silver off of this low. We were calling that a wave 2. So we are now building into the heart of the third wave, potentially. And what that means is we just topped in this wave 1. We're getting a wave 2 now. And then we should be in the heart of the third, which projects to much higher levels. I'll save that for a different video. For right now, what I'm doing is looking for evidence of where I should put some capital at risk to get on the long side of silver. So here it is, real simply put. I got the yellow count on here, which is looking for a 3-wave correction for a wave 2. So the A, B, C is in yellow. And there's a couple different ways you can look at an ABC correction. What I'm doing is I got the yellow fibs over here. If A equals C, then it's this level right here, which also coincides with the 1618 for how I'm measuring the C wave, comes in at $30.02. Could that be an area that creates a bounce? Yes, it could be. Could it be the low? I think it's possible, but I don't like it. I see more evidence that it comes lower. So a reasonable extension for a C wave are these yellow fibs down here. I like the 1236 coming in at 29.43. The other amazing piece of evidence is this ratio box, which if you're an Elliott wave guy, you know what this is. It's the ratio of 5 versus 1 through 3 comes in between the 618 and the 764. Just another clue. There's some confluence between the 1236 and this ratio box. The other thing I'm looking at is simply in white, just the simple measurements for a fifth wave. For a C wave, which would be in 5 waves. So if that's the case, based on the initial movement, there is a white fib down here matching the white 5-wave move for a C wave coming in at 2236 at 29.29. Again, very near the ratio box. The last piece of evidence, well, really, there's more, but the fourth piece of juicy evidence, compelling evidence, is this supply-demand zone. I've drawn it way long ago from the past, but I drag it over and see if it still remains relevant. Only the supply-demand zones that remain relevant are the ones that I drag over. This one was a fake breakout, came back down, and then got rejected once, twice, 3, 4 times. It could not get above that zone. This is a fake breakout. Then you got a corrective wave, what we're calling wave 2, and then guess what? It came right back up. Call this a rejection. This is definitely rejection. Another rejection, and then it finally busts out above it. And then look at the beauty of properly drawn supply-demand zones is then it backtested it. And this time it held it and coughed up a beautiful 5th wave of 5 of wave 1 right into the ratio box. Yeah, it wicked above it. Could not get above that high. Now we're in the corrective wave. So that supply-demand zone I just showed you is right here where all these other points of confluence are. So, I mean, just call it 29.29. It's easy number to remember. Is silver going to come down to 29.29? Just one other thing I didn't mention. These blue fibs right here are the retrace of the entire 5-wave structure up to that high right over here. So is it reasonable for a wave 2 to just catch support around the 5 or in between the 5 and the 618? Absolutely. Especially in a bull market, pullbacks can be shallower. Normally, Could silver come all the way down and test even like the 764 or even the 886? Of course it can, yes. And but it's already been doing that for like 4 years. So my view is that this is going to give a more proper extension for a C wave, just a slight extension for the C wave down in here, because all these other ratios and measurements suggest that that would be reasonable to expect. Are these predictions? No. The parameters that I'm looking at are 3130 to the top side. Do I, you know, is it going to kill me if it spikes above there with a wick or something and then comes back down? No, but I am going to measure. I'm going to change my measurements based on price action, because price is king. But ideally, price, if it wants to remain this normal looking impulse for fifth wave, for C wave, then 3130 to the top side. And then we make it down here. And I really don't want to see it get much below the 618, or then I'm counting something wrong. I have to redo things. So that's the parameters, 3130 to the top side, and really just call it 2929. Cool. All right. Thank you for watching. And remember, if you want to get some additional help and support from a community regarding your psychology, I highly recommend The Professor Trades. All right, thanks for watching, guys. And remember, no matter what you do, remember, markets are complex systems, nonlinear. So whatever you do, don't lose your behind on any days that end in Y. All right, thanks for watching. Bye-bye.